Throughout the early 2000s, MicroStrategy struggled to regain its footing. The company continued to develop and improve its software products, but the financial challenges were persistent. By mid-2010, it was clear that something needed to change if MicroStrategy was going to survive and thrive.
We realized that if we wanted to move into the next era, we were going to have to embrace a new set of technology trends.
Despite their best efforts, the company's revenues were stagnating and they were losing money. It was around this time that Michael Saylor started to look for innovative ways to turn things around. First, they thought about stock buybacks, where MicroStrategy could have used its own cash reserves to buy back its own shares. This would reduce the number of outstanding shares and potentially increase the stock price. While this might have provided a temporary boost to the stock price, it wouldn't solve the underlying issues of revenue stagnation, and it would lead to a slow death of the company because it wouldn't fundamentally improve the business.
What a waste that is.
They thought about reinvesting their cash back into the business through company acquisitions. While reinvestment is crucial, MicroStrategy was already struggling with stagnation, and further investment in a saturated and highly competitive market might not yield significant returns, leading to a fast death if these new unproven ventures fail.
It can buy other companies, it can spend on research and development, it can buy new equipment, buildings, or technologies, or it can return money to shareholders. This can take the form of dividends or stock buybacks.
And so, in 2020, with the global economy reeling from its pandemic, Michael Saylor made an ultimate decision. He proposed that MicroStrategy invest a significant portion of its treasury into Bitcoin. His rationale was simple. Traditional assets like cash were depreciating in value due to inflation, while Bitcoin, with its fixed supply, presented a compelling store of value.
And after we looked at all the options, we concluded that Bitcoin was the best option because it's a commodity, not a security. And there are a lot of technical benefits to a publicly traded company owning a commodity or property.
Despite the initial skepticism from the board and investors, Saylor's conviction won out.
What's the second best? There's no second best. There's no second best crypto asset.